Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, 27th of August, Tuesday. Today we got a little bit of economic data. S&P Case-Shiller home price skyrocketed to 6.5, continue. It's still super high, almost at 7%, and fuels the concerns about inflation. House price index year over year 5.1. But the most interesting facts about today, it's not about inflation. It's about consumer confidence and manufacturing data. In terms of manufacturing, we are seeing a triple negative. So, including services, this is a check in the right direction for inflation. I think we can all agree that manufacturing prices overall are going lower. And the most concerning part right now is economy strength, labor market strength, and consumer spending. So having this data is good, but consumer confidence, despite the fact that it's 103 higher than expected, we are seeing in the report that consumers' assessment of the current labor situation, while still positive, continue to weaken, and assessments of the labor market going forward were more pessimistic. This is likely reflecting the recent increase in unemployment. So consumers are worried, not about their economy, household, families, economy, but also about the labor market. Are they going to be fired? Are they going to keep their employment? And this is what's scaring the market a bit right now. Another thing in the same direction is that the former Fed master thinks that the Fed is not behind the curve. You know that in the media, in a lot of establishments, news, posts, analysts think that the Fed is behind the curve and they should cut 50 basis points. But Fed master is saying that the Fed is not behind the curve, and he doesn't support a 50 basis point rate cut out of the box. But what is the market pricing in? Well, right now we have 63% of probability for a 25. But look at this. We are jumping from that to a 50 basis point in November. And this thing is just ramping around. It's just sometimes 50, sometimes 25. I think, my opinion, is that 50 is way overdone. I think 25, 25, 25, 25 is way more positive path than freaking out and cutting 50 basis points because people think that the economy is going to be destroyed or things like that. Recession might happen, but that doesn't mean that the economy is not strong. We can have a slowdown, we can have a cool down of the economy, and at the same time, the labor market be in a healthy situation of adjustment. So I agree with Fed masters. I don't agree with this assessment, and I think the market is sniffing something. This is the 15-minute chart, and after yesterday's sell-off and hold down here, we are in more or less the same range with two nuances. This failed auction to the downside and this failed auction to the upside. Market basically doesn't know what to think. We need more time to digest certain moves. We need more data. We need to really be patient because right now we are ending August. We are starting September. Tomorrow after the close, we have earnings for NVIDIA. That's why NVIDIA is the only one that is in the green, but NVIDIA is not the economy. It doesn't matter. Earnings. NVIDIA will have some impact in the market for sure, but I think overall, we are seeing some kind of correction that I think is legit. Now, having said that, let's just analyze where we are. I think we are in the upper, we are a little bit positive today. We are still fighting pre-market high right here, pre-market high, right here, pre-market pivot. Sorry, that's pre-market high. So we are still fighting that. And as you can see, this is still an issue because we are not able to push the 50% encroachment, consequent encroachment in this 15-minute inverse fair value gap. So we are a little bit bearish. We are holding at the same time this bullish 15-minute fair value gap, which is not holding the consequent encroachment. So we are basically in this range in between, chopping around. And in my opinion, we are more bearish than bullish. So what opportunities did we have today? Choppy means difficult to trade. We are day traders. We are seeing the market in a range. But let me just show you this beautiful trade if TradingView works. Okay, so we are back. So as I was saying, let me just show you this beautiful trade that I took at the open. This was the overnight in a range. Today, basically at 3, we started ranging in the London Open. We pulled back and we went deep in the hole, and liquidity, liquidity, and liquidity. In the 15-minute chart, you can see this pivot, which is the start of this fair value gap on the daily. So this is a fair value gap on the daily. Right there, at this pivot, we bounced at the open. We were pushing down, and this was low, high, lower low into a displacement. We start seeing some kind of bullishness. We had an order block here that I was watching. But the thing is that I don't usually trade breakaway fair value gaps like this one, because as you know, my setup is just taking the consequent encroachment and then buying that with the stop at the low of the candle. So if I trade that, this candle would have been my entry right here with the stop down here at, I don't know how much, 63 points. No. So I had to buy the pullback. This was the pullback. The stop was right here. It was at 28 points. My risk was basically doing this, but I trusted this fair value gap because it was a breakaway. It didn't touch the consequent encroachment. So it was so bullish that we didn't even reprice at the 50%. So I trusted that. I took the first pullback, and at the same time, I trusted this order block, and we just went through that and started accumulating, and then we continued and continued and continued. And that was beautiful because it was not only this order block, it was also this dot line is last week low. So a lot of people is buying the low. A lot of people is buying this low. We got accumulation, and then we moved higher where relative equal highs right here for 125 points and almost $2,500 today. 4.49 risk reward ratio, beautiful trade. Now, as I was mentioning earlier, we got a rejection, not in a random area. Let me just show you where are we rejecting, because we are rejecting this. This is a 1 hour, by the way. We are rejecting the 1 hour inverse fair value gap consequent encroachment. Look at the bodies. Look at these bodies in the fair value gap. And also the 30-minute chart has also been respected. So it's not only this 15-minute, which basically continues pushing the price action lower. We are being rejected. I think we might see continuation, but we are not that strong in which, the Nasdaq. Sometimes it just pullbacks and goes straight to the next level. The next level is the point of control from all-time highs and the previous the previous point of control from the bottom. And this is an area of previous rejection with a 1 hour fair value gap being respected from yesterday. So if you thought that the Nasdaq was going to attack this, we are not that strong. And that's the thing that you have to understand. We are a little bit weaker. We are trying. Small caps are in the red. Breath is in the, not in the red, but it's still healthy. I look at this and it's powerful. It's momentum. It's trend. It has a lot of good news. But the banks are not pushing. Semis are mixed. I think Nvidia is going to report good earnings, but it's not a lot of positive sentiment yet. Everyone is waiting for that. I think there's just some kind of inertia, a slow grind to the upside after this pullback that people is buying. People is just again in that kind of mindset of buying the dip. But this was the best trade of the day. The best trade of the day, not even this short. And I don't see any more setup. What I see is what I told you earlier. Failed auction to the downside and failed auction to the upside, with two fair value gaps pressing the price action. So we need patience. We need time to see what happens today, and even tomorrow. We need to wait for Nvidia earnings because that's going to impact the earnings. So impact the market is going to impact the sentiment of a lot of people, not only the traders, also investors, banks, hedge funds, which are waiting for Nvidia to really continue destroying. And Nvidia has a huge market cap, so it's going to impact. But don't forget about the long term. Don't forget about this kind of crazy 50 basis point discussion that I mentioned earlier, and try to find these kind of setups, the easy setups for the day, because we are still chopping, grinding. You can just buy here and forget about until the close. That would work. But you really need to find these setups. And right now, I don't see anything similar. And I don't know if we are going to reject again, if we are going to go too low. It's just, I think the movement is done. My recommendation is just wait for tomorrow, wait for the close, the Nvidia earnings, and on Thursday and Friday, smack the market up or down. But discipline, patience is going to be needed right now. That's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that the trading day is not over yet. We are a pretty difficult situation. I mean, right now, this is not a long, this is a short. But anything can happen, and I don't see this market neither weak nor strong. Maybe more weaker than stronger, but it's just not worth. So wait for tomorrow. Remember that discipline, patience, and risk management are key for your success. Stay safe, everyone, and see you tomorrow.